If we go on Data Roma and we look at Monish Pabrai's latest investments, we can see that 92% of his portfolio is made up of Micron stock. Wait, what? 92%? That's a bit extreme, isn't it? The reason why this is so high is because this only includes his US investments, his US stocks. He does not have to report his other investments like his foreign holdings. Realistically, Micron makes up around 20% of his portfolio.
Might be like around 20 or a little less than that.
Still, 20% is a massive position, so why does he own so much? Let's do a deep dive into Micron stock. And just before we do, I want to look at the other super investors that are buying it, because it's not just Monish who owns it. Lei Lu, aka the Chinese Warren Buffett, is a Micron shareholder. It makes up 33% of his portfolio. Guy Spear, another famous value investor, that's worth 6.1% of his US portfolio. And Seth Klarman, another notable name in the value investing, super investing world, that makes up 2.9% of his portfolio. Now this is very important. Before you even think about buying a stock, you need to understand the business. Remember that a stock is a business, so before you buy it, look to understand it. How does it make money? Micron is an American producer of computer memory and computer data storage. This includes dynamic random access memory, flash memory, and USB drives. Okay, let's put that simply. They are a company that produces chips that provide memory and storage for technology like phones, computers, automotive, cars, and other tech items. So let's think about the key reasons why these super investors are putting so much money into Micron stock. A key reason why they're buying is because of the oligopoly of the chip industry that Micron are involved in. AKA, there are only 3 main businesses that produce these types of chips that make up Micron's business model. Samsung, SK Hynix, and obviously Micron themselves. This is good because it means instead of competing against 50 other businesses, you're competing against 2 other businesses. If another business wants to come in and take some market share, it would be extremely hard for them to do so. They would need to spend a lot of money, a lot of capital investments, even to just think about producing these high-tech chips. Of course, you can't collude with the other 2 companies in the industry and dictate prices and work prices together, but you can kind of cheekily work together with each other to maintain something that benefits all of the current people in the space and keep the competitors out. And this is what they're currently doing, and this is what Monish Pabrai talks about. They do this by not getting all in a room together, talking together, colluding, that is illegal, but through public quarterly updates and calls. This is their indirect way of speaking with one another, working together to stay dominant over the industry. It's for these reasons why Pabrai doesn't think a 4th player will come in and compete, because it takes so much capital investment, and if they do try, these 3 big companies are just gonna whitewash them out and not let them do so. The other great thing about only having a few competitors is it reduces the cyclicality of the business. If we look back to the mid-1990s, there were 20 suppliers competing in the DRAM market. Today, there are only 6, and 3 of those have 95% of the market share. So realistically, there's 3 main players. This means there's not these crazy cycles like there used to be, where competitors all produce and oversupply chips, killing away profit margins and hurting the business. We can see this when we look at the return on equity of Micron stock. As time has gone on through the different cycles, return on equity has been averaging higher. This means the business model of these chips is getting more profitable as the cream of the crop comes to the top and the other producers fall away. I hope that makes sense to you guys. Another big positive is the future growth of the industry as a whole. Pabrai and the management themselves all are computing strong growth in the future and just a bigger market in general. If you look at modern technology as a whole, which Micron chips are used for, the market is growing substantially, growing in terms of numbers, but also in terms of computational power needed. Just take a look at AI. That sector is expected to more than 10x over the next 10 years, from a $120 billion industry to a $1,600 billion one. Look at automobiles and the rise of EVs, which need DRAMs to operate. Phone usage is increasing. You don't have to be a genius to work that out. Computer usage is increasing. Technology as a whole is growing. This is great for Micron's business model because it means their product is going to be in hot demand now and even more so in the future. They can sell more and they can make more money. Now, the great question with every stock is, what is the intrinsic value? What is the true value of a stock? I'm going to be looking at Monish Pabrai's calculation of the intrinsic value of Micron stock because he's a long-term value investor. He's got such high returns in the past. I like his methods. He keeps his methods very simple. He's not into complicated valuation models, and actually one of his investing rules is not to use Excel and something that may be considered complicated. Let me show you how he values Micron stock. The chip industry that Micron is in currently delivers $150 billion in top line revenue. And in 7 to 8 years, that number is predicted to be around $300 billion. Guys, this is all from Pabrai's research. This industry is of course an oligopoly, and Pabrai says that Micron may take 75 to $100 billion of that market. So that's the top line, that's revenue. In terms of cash flow, which is what you keep at the end of the day, it could result in around 20 to $30 billion of profit a year. And Pabrai says that the market should look at the business model, the slowdown and cyclicality for Micron as we talked about, the fact that it basically doesn't lose money in downturns, and the market should value it accordingly. Let's say a 10x multiple on $30 billion in cash flow is a $300 billion market cap. That is 5 times the amount the current market cap is, and that would result in the share price going to $250-ish a share.
I don't know whether we'll get to $500 a share from your mouth to God's ears, but I think we could get to a couple $100 a share. Sure, no problem. And we bought in the 30s. And if we get to 200 or 250, he's buying back stock and so on, then it's a decent return.
Not a bad return. So that is Pabrai's way of calculating the intrinsic value of Micron. If you disagree with his assumptions, with his calculations, let us know why. But I like the way it's done. He keeps it simple. And guys, his method has worked for him in the past. He's made a lot of money through his style of investing and his method of calculating intrinsic value. Now let's look at the negatives. The first potential negative you could say about the business model is the high capital expenditure needed to produce these chips. Obviously, if you had a choice, you would want a business that basically requires no investment to make money. If you could look at the ideal business, you would say, okay, it costs $0 and it can make me $1 million in return. You wouldn't want it to cost you $1 billion and then it only makes you $1 million. Does that make sense? So the chip industry does require high capital to produce these high-tech chips. They need expensive factories, expensive equipment, buildings, technology upgrades, and everything else. Now we look at Micron over the past 4 years, capital expenditure has been around $10 billion on average each year. That's a lot, and that is a negative. Another negative is the cyclical past that the business has. With the way the chip market was formed, Micron's history of sales and profit, it has been very cyclical, as we kind of alluded to earlier on in the video. Back in the day, when there were more competitors, they would all spend a lot of capital on their equipment to build up inventories of chips and innovate their products, spend a lot of money. However, because all of these companies were doing so, it would result in an oversupply of chips. Often demand would cool off and there was too much supply. Guys, what happens to prices when there's too much demand and low supply? How good is your economics? Prices go down and profit inevitably, I can't speak English, goes down. As we can see with asset utilization, it is volatile. Some periods they can make a lot of money with their assets, and others they make a whole lot less. As we said before, Pabrai thinks that this cyclicality should decrease in the future with less players in the industry, so this negative may not be as bad as it has been in the past. Those are two of the main negatives that could put you off the stock. The other one, I guess, would be that business that can be quite hard to understand. The dynamics of chips for technology and how this will grow in the future and how it's actually used. This can be hard to estimate, especially for the ordinary investor, but most experts do estimate this market to grow. Okay, so let's just sum things up quickly. A lot of super investors are buying this stock. From a valuation perspective, they're not the worst play if you look 7 to 8 years ahead. The demand for their products is expected to be high in the years ahead as technology grows and requires more chips and better specs on those chips. Then negatives, it's been cyclical in the past, but that seems to be decreasing now. If you can get your head around the tough business model, look and make your own valuations on the stock, I don't think it's the worst stock to own. Let me know your opinions on the stock below. Importantly, I want to know what are the negatives, what are the things that you don't like about the stock, because this rarely provides insight because you can kind of battle your ideas, the negatives, the positives, and get a better picture that way. I always like reading those type of comments, especially ones with unique insight. Lastly, if you do want to see my portfolio and the stocks that I'm buying, join the Investing Academy below. Thanks for watching.